Welcome back. Stocks are down in early trading. Let's go to an investing professional south of the border to get her take on these markets. Nancy Daoud is private wealth advisor at Ameriprise Financial. She likes several sectors of the market, including the energy sector. Let's go to Nancy now. Nancy, thanks a lot for joining us. First of all, what's your take on this economic news that has investors in such a glum mood this morning?
Well, we're sort of in an in-between time frame, so it's not so unreasonable. There's a lot of expectations, but also a great deal of apprehension as to what the new policies will really be doing. And there's also a bit of worry about geopolitical risk as well as the tariffs and how that will affect the American economy. But the jobs report was pretty good, much higher than expectations. So that should give a little bit of boost to investors. But I think for the most part, stocks have priced in all the optimism towards the end of the year post-elections, and we didn't get our Santa Claus rally.
This morning on the jobs numbers, investors are taking the glass half full, glass half empty interpretation. The knee-jerk reaction is that a stronger than expected jobs report means the Fed less likely to cut rates in a fashion that the market would like. You seem to, and we had an earlier guest who took the glass half full approach, that a strong U.S. economy in the longer term is good news for the American stock market. Do you take that second view?
Yes, I think so. It's very likely that the Fed will not cut rates again the next time around. But I think the fears are more around inflation, that it could spike up again. And like I said, how the tariffs will, if they are implemented, how they will affect corporate America. And also, let's not forget the geopolitical risk. There's a lot of uncertainty right now because things are not in place. And then there's also expectations, which is really what the market's all about. And this is what we discuss with our clients all the time. It's all about expectations. You have to keep your expectations in check. Even if everything turns out great, it's not going to happen overnight. This is not a button that, the new administration is going to push and everything will suddenly become wonderful. We've become accustomed in a generation of, pushing buttons and have everything happen immediately, and that's just not going to take place. So I think the prudent approach for our clients as we advise them is to make sure you keep your expectations in check, especially coming out of a terrific year in the market like 2024.
Okay, we said you like the energy sector. We'll get there in a second, but you also like the U.S. financials, and that is topical because we're not too far away now from the beginning of corporate earnings season in the U.S., which begins with the likes of J.P. Morgan, Citi, and Wells Fargo. Why do you like U.S. financials?
Well, financials, energy, and these sectors really love deregulation and tax cuts, and that's what's being promised. So that's the optimism around that. And that's why I would advise overweighting financials, energy, and tech, of course, and certainly underweight the healthcare sector, since healthcare tends to do really much better under regulatory stringent rules.
Why do you like energy? We've remarked already on this program about the striking rally that we've seen in crude oil. It's up about 10% or so since the latter portion of December. What are your thoughts on the energy sector?
Well, there's a couple of things. The talk about unleashing America's energy supply, that's one thing. But of course, the real link here is the link to the technology. AI requires a great deal of power and energy. And in order for us to stay in that race and win that race and do better than the rest of the world, we're going to have to really pay attention to our energy supply. And that's why I think there's really good prospects. But of course, not without significant volatility in the meantime.
And you are not dissuaded from those rich multiples on tech stocks. Why do you like tech?
Well, this is where it's at. I mean, we are about to enter another boom in technology, and it might even be faster than the last one. There's so much innovation going on in the AI space. There's going to be so much competition for that. And of course, our markets thrive on competition and being able to unleash the innovation. And if we're allowed to do that, it's going to be a wonderful thing for the tech sector. However, again, having said that, must have very long-term prospects for this because there will be a lot of volatility in the meantime and a lot of ups and downs. And not every investor can handle that. You have to keep your goals in check, your time frame in check, and what I call stomach lining in check, as far as can you handle the appetite for risk.